you're not so much concerned about the top line as you are about costs perhaps being pushed up by inflation. What's your take?
Yeah, I think slowing top lines has to be paid attention to. I'm thinking about next year when I put up a yellow flag about costs and margins. Consensus expectations is another double-digit earnings year next year, and I'm not so sure with some cost pressures from raw materials and labor and transportation. Might not we have some margin issues? So maybe it's top line and bottom line after a period of time where we kind of didn't have to worry about either. They've both been so good.
But it seems like you're saying that in the current quarter that's being reported, maybe even in the guide into the beginning of next year, you don't expect to see those things showing up. So would you say that the market is generally fairly valuing these stocks, or do you expect to see perhaps a pop, things better than people expect?
I think we're in a trading range with stocks because the earnings picture is not, all green lights. It's mixed, plus all the other undercurrents. We've had issues year to date, but the earnings have overwhelmed it. Now that the revenue and earnings line is not absolutely perfect, we have to worry about these sorts of things a bit. And I think that's why this putting this market in this sidewise trading range. And as you point out, even within the day, some volatility. And within the day, today it's growth and not value. Today it's small and not big. Tomorrow could be just the opposite. Lots of turmoil inside the market.
Bob, do we need to be talking more about the U.S. and China? I mean, you've got this Axios report that's getting referenced a lot today in terms of the impasse between these two countries, this idea that the trade war is at the beginning of the beginning. Is this going to be a much bigger issue for companies and for earnings and thus for stocks than the market's anticipating right now?
It's very possible, as your earlier guests have talked about, the amount of earnings impact so far is not very big, but that won't last forever. China, different from all the other conceptual trade deals we've done, is a big behemoth out there. And in my darker moments, I wonder, is this well beyond trade? I mean, we're entering a Cold War II. The first one with Russia, this one with China, it's beyond trade. I think this one's going to last for a while, and yes, it does have implications. As a U.S. portfolio manager, that causes me to want to have more of my earnings here in the U.S., so I have less worry about that sort of impact.
Hey, Bob, Netflix is getting some attention today because of this $2 billion bond offering, awfully close to taking you back to the lowest level since the spring. When you talk about margins and balance sheet issues, I mean, how long can these companies that have relied on capital markets keep going back to that well?
Great question, Carl. In the era of financial repression, i.e. interest rates near zero, lots of people got money that in a normal environment they wouldn't get money from. And I think that now is going to separate the good from the not so good. So, you've picked on another theme in my portfolio. Make sure the cash flow's there so they can grow their business. Dependence on outside capital, I'd want less dependence on that as the economy continues to mature.
And Bob, as we head toward the holiday season, you say you don't see any signs of a recession, but are there any particular metrics that you'll be looking for, whether it's the shift to online, the performance of omni-channel, whether Amazon and like incumbents in that space dominate? What do you be watching?
Yeah, so first of all, I think because the consumer's in good shape, i.e. more of us working, some of us starting to get some raises, a savings rate we should mention that's up here rather than a lot lower as it normally is at this point in the cycle. So the backdrop for the consumer is pretty good. Inventories don't seem to be a very big problem, so you're right. It's where are they going to shop? And I think the news is going to be good overall. Online will certainly get its fair share of increase this year. We'll see what happens with bricks and mortar, but I think we're going to have a good Christmas season.